They lied to you. Not once, not twice, 41 times. And they're about to do it again. Look at these thumbnails plastered across your feed. $50 silver by December. $100 silver is coming. Every single promise designed to make your heart race and your finger click. But here's what they don't want you to see. Silver to the moon? The squeeze is starting today. These aren't predictions. They're entertainment. And you're paying for it with your capital, your time, and your trust. Every one of these predictions failed. Every single one. The promises evaporated like morning mist. The timelines came and went. And the silence from these experts was deafening. Most of the channels that made these bold claims, they're still publishing new predictions today. Same confident voice, same urgent thumbnails, same empty promises wrapped in different dates. Not a single one published a scorecard for their past performance. No accountability, no transparency, just content designed for the algorithm, not for your financial success. None of them told you what they got wrong in their analysis. They never explained why the technical indicators failed, why the fundamental thesis collapsed, why this time wasn't different. None of them changed their framework after the data proved them wrong. They kept using the same broken compass, the same flawed model, expecting different results. That's not analysis. That's insanity. Instead, they just moved the goalposts. $50 by December, it became $50 by Q2. Then $50 by year end. Then the setup is building. And they asked for another click, another view, another ad impression. I got tired of the noise. I got tired of watching good people make bad decisions based on clickbait dressed as research. So I spent 3 months doing the work they won't do, the work they're afraid to do. I built a database, not opinions, not hot takes, a comprehensive, time-stamped record of the entire expert community. Every bold claim, every missed target, every broken promise. I tracked 47 specific dateable silver price predictions. Not vague sentiment, not directional bias. Actual numbers with actual timelines that could be actually measured. This is real accountability. For each prediction, I noted everything. The exact price target, the specific timeline, the creator's confidence level, and most importantly, the final outcome when the deadline arrived. Cold, hard data. Today, I'm going to show you what that data reveals, and I promise you, it's not what the algorithm wants you to believe. The truth is uncomfortable. The truth is sobering, but the truth will save you money. More importantly, I'm going to show you what this means for how you consume silver market analysis, how you filter signal from noise, how you protect yourself from well-intentioned but dangerously wrong predictions. This is the Stat Guy. No hype, no hopium. Just data, accountability, and respect for your intelligence. It's time to look at the score. It's time to see who's been telling you the truth. Let me be clear. There is a core structural problem with silver analysis on YouTube today. This isn't about attacking individuals. This isn't personal. This is about a broken system. It's a structural problem, not just a character flaw of individual creators. The incentives are wrong. The feedback loops are broken. The platform rewards the exact opposite of what creates investment success. This problem exists because of how this platform fundamentally incentivizes financial content. YouTube doesn't reward accuracy. It doesn't reward nuance. It rewards engagement, and engagement comes from emotion, not precision. YouTube rewards bold, aggressive, and certain predictions. Silver might consolidate here, doesn't get clicks. $100 silver in 90 days gets virality. The algorithm doesn't care if you're right. It cares if you're confident. A thumbnail screaming $50 silver in red font gets 10 times the clicks of a nuanced macroeconomic update. The data is clear. Emotion wins, accuracy loses, and you're caught in the middle. The algorithm rewards emotional engagement over analytical accuracy. Fear, greed, FOMO. These are the currencies of the platform. Rational risk assessment, that's boring. And boring doesn't pay the bills, but as we know, the markets do not reward your emotions. The market doesn't care about your excitement. It doesn't validate your hope. It punishes imprecision with ruthless efficiency. Markets punish overconfidence with extreme prejudice. Every percentage point of unwarranted certainty translates into real dollars lost. The market is the ultimate accountability machine, and it never forgets. And the viewers, many of you watching right now, are making real capital allocation decisions based on this content. You're buying physical silver. You're sizing positions. You're telling family members, this isn't a game. You deserve better than entertainment dressed up as research. You deserve analysis that prioritizes being right over being viral. You deserve creators who fear being wrong more than they fear being boring. This channel was built from day one to be the data-driven alternative. Not the most exciting, not the most viral, but the most honest. And in the long run, honesty is the only edge that compounds. And that alternative begins with one word: accountability. The willingness to be publicly wrong, the courage to show your scorecard, the humility to learn when the data contradicts your thesis, let me walk you through the methodology of the database. This wasn't casual research. This was forensic analysis. 3 months of archiving, time-stamping, and categorizing every claim I could verify. For a prediction to qualify for this study, it had to meet 3 strict, non-negotiable criteria. No wiggle room, no benefit of the doubt. If it didn't meet all 3, it wasn't included. Criterion 1, it had to include a specific price target, not higher, not bullish, not to the moon. An actual number, $30, $50, $100, something falsifiable, something measurable. Criterion 2, it had to include a specific or implied timeline. By year end, within 6 months. Q2 2023, this was the minimum requirement. Vague timelines like eventually or soon were disqualified. Without a timeline, a prediction is unfalsifiable. It's not analysis, it's a belief system. And belief systems don't help you manage capital in volatile markets. They get you liquidated. Criterion 3, it had to be publicly archived and still findable today. Screenshots, Internet Archive captures, actual video timestamps. I needed proof, receipts, evidence that couldn't be memory holed. Out of 47 predictions that met these criteria, only 6 were directionally correct within a 20% tolerance band. 6, let me say that again. Only 6 were even close. 41 were wrong. Not early, not still developing, wrong. That is an 87% failure rate, not a typo, not hyperbole. 87%. Let that number sink in for a moment. 87%. If you followed the consensus silver predictions on YouTube over the past 2 years, you were wrong almost 9 times out of 10. Now let me be absolutely clear. This does not mean silver is a bad investment. It doesn't mean the long-term thesis is dead. It doesn't mean you shouldn't own physical silver. It means that short-term price prediction at specific levels is extraordinarily difficult. More difficult than the confident YouTube thumbnails would have you believe. More difficult than anyone wants to admit. The confidence level of the creators never matched the accuracy of the outcomes. The correlation was actually negative. The more certain they sounded, the more likely they were to be wrong. The failures are not random. They're not bad luck. They're not manipulation by unseen forces. They follow a predictable, analyzable pattern. And once you see the pattern, you can't unsee it. I've identified 4 specific analytical errors that account for the vast majority of these failures. 4 cognitive traps, 4 blind spots, 4 places where even well-intentioned analysts go wrong. Error number 1, ignoring paper market dominance. This is the foundational mistake, the original sin of silver analysis. And it's shocking how many experts don't understand this. Most analysts treat silver as if it responds only to physical supply and demand. Mining output, industrial consumption, jewelry demand. These fundamentals matter, but not on the timeline they're predicting. In the short term, this is a dangerous misunderstanding of how the market actually functions. It's like trying to predict ocean tides by studying individual waves. You're looking at the wrong time frame entirely. COMEX silver, the benchmark for global pricing, is primarily traded by financial participants. Hedge funds, algorithmic trading desks, commercial banks managing their books, not miners, not industrial buyers. The behavior is driven by dollar strength, interest rate differentials, and relative value trades. These are the actual short-term price drivers, not mining output in Peru, not solar panel demand in China. They don't care about the long-term supply deficit. They don't care about the gold-silver ratio. They don't care about monetary history. They care about their quarterly P&L. That's it. They care about the carry cost and the basis. These are the technical terms for whether it's profitable to hold the position. If the math says sell, they sell, regardless of the thesis. Predictions that ignored this dynamic expected silver to spike precisely when it should have consolidated. They misread the market structure. They confused the long-term thesis with short-term price action. When the paper market says sell, the spot price follows regardless of what's happening in the vault, regardless of the supply deficit, regardless of your thesis. The paper tail wags the physical dog. Error number 2, the flawed relationship with the US dollar. This is where macro analysis meets reality, and most YouTube silver analysts failed this test completely. Silver has a historically strong inverse relationship with the DXY dollar index. When the dollar goes up, silver typically goes down. This isn't opinion. This is 40 years of price data. Most failed predictions assumed the dollar would weaken faster than it did. They underestimated the Fed's resolve. They underestimated global dollar demand. They called the dollar's peak at least 6 times and were wrong every time. In 2022 and 2023, the Federal Reserve maintained a higher for longer interest rate policy. They said it explicitly. They showed it in the dot plot. They communicated clearly, but analysts didn't believe them. This kept the dollar strong and silver suppressed for much, much longer than the community expected. The predictions aged like milk. $50 by December 2022 became an embarrassing footnote. Here's the rule. If your silver prediction doesn't have a dollar thesis, it's just a guess. You can't predict silver in isolation. The dollar is the denominator, always. Error number 3, confirmation bias in sourcing. This is the echo chamber problem, and it's worse in the silver community than almost any other investment space I've studied. Analysts were sourcing their data exclusively from within the precious metals echo chamber. They were talking to each other, citing each other, reinforcing each other's biases, never seeking disconfirming evidence. They were citing bullion dealers who have a direct vested financial interest in you buying more metal. Not neutral sources, not academics, not even skeptical sources, just people selling the product. They were citing other YouTubers who were citing them back. A circular reference loop, each person using the other's prediction as confirmation of their own. This isn't research, it's a feedback loop. Meanwhile, critical data, like the Commitment of Traders report, was being systematically ignored because it contradicted the narrative, because it was inconvenient, because it wasn't bullish. In commercial shorts, the big bank-satted positions, it was a clear, bearish signal. The smart money was betting against the rally, but the YouTube community rationalized it away. Manipulation. They'll get squeezed. They rationalized it away to keep the bullish narrative alive. Because bearish content doesn't get clicks. Because doubt doesn't build a subscriber base. Because nuance doesn't go viral. You cannot find the truth if you only look for data that agrees with you. This is Science 101. This is Critical Thinking 101. But it's astonishingly rare on financial YouTube. Error number 4. No exit condition or falsification criteria. In my opinion, this is the most significant analytical failure in the entire silver content ecosystem. The one that makes accountability impossible. This represents the most significant analytical failure I've found. Without this, prediction becomes religion. Analysis becomes faith. And you can never be proven wrong just early. A proper forecast must say, I'm wrong if X happens. This is Karl Popper's falsification principle. It's the foundation of scientific thinking. And not a single silver YouTuber was doing it. None of the 47 predictions I tracked had conditional logic. No if-then statements, no invalidation triggers, no stop-loss for the thesis itself, just open-ended bullishness. They were statements of belief, not testable scientific hypotheses. This is the difference between a pundit and an analyst, between a preacher and a researcher, between entertainment and education. Without an exit condition, an analyst can never technically be wrong. They're just early. And early sounds so much better than incorrect. It protects the ego, it protects the brand, but it destroys your capital. Early is just a polite euphemism for being wrong about the timeline. And in markets with carry costs, being wrong about the timeline is being wrong. Period. In finance, being early is often functionally the same thing as being liquidated. Your capital is tied up, opportunity cost compounds, and eventually you're forced to sell at a loss just to survive. So how do we fix this? How does the stat guy operate differently? I'm not here to criticize without offering a solution. I built a framework, a different way, a better way. I have developed a 4-element framework for every single prediction published on this channel. No exceptions, no shortcuts. This is my commitment to you. This is my brand. Element 1, every claim must be specific and falsifiable. No vague language, no weasel words. Just price, direction, and date. If I say $35 silver by June, that's what I mean. No hedging like around 35 or possibly by mid-year. Those qualifiers destroy accountability. They create wiggle room, and wiggle room is the enemy of intellectual honesty. Element 2, every prediction must have a primary thesis, the why. I will show you the exact causal mechanism I believe is driving the move. Not just what I think will happen, but why I think it will happen. I will show you the specific data points, the macro setup, the technical levels, and the catalysts I'm watching. You'll see my entire reasoning process. You'll be able to disagree intelligently. Element 3, the invalidation condition. This is my stop loss for being wrong. I will tell you in advance exactly what event or price level would prove my theory is incorrect. I will tell you exactly what data point, what price level, what Fed decision, what macro event would prove my theory is fundamentally incorrect. Not just delayed, but wrong. Element 4, the grading date, a public moment of reckoning. I will return to the prediction on a specific date, review the outcome, and give myself a grade in public on camera. I will return to the video, pull up the actual price data, and give myself a letter grade based on accuracy. No excuses, no context adding. Just, was I right? Or was I wrong? If the data says I was wrong, I will say I was wrong, without qualifications, without excuses, without blaming manipulation or unforeseen events. Wrong is wrong. And that's okay. This framework doesn't guarantee I'll be right 100% of the time. I'm not claiming omniscience. I'm not claiming I've solved the market. No one has. No one ever will. Nobody can predict the future with perfect accuracy. Anyone who claims otherwise is either delusional or dishonest. The goal isn't perfection. The goal is calibration. The goal is intellectual honesty. But this framework does guarantee that I will be calibrated and honest over time. My hit rate will be measurable. My errors will be documented. And you can decide if my process is worth following. After 12 months, you will have a concrete record of my performance, not marketing, not storytelling, actual wins and losses, actual predictions and outcomes, a real auditable track record. You can then decide for yourself based on evidence, not personality. If my framework is worth your time, if my analysis earns your attention, if my process deserves your trust. That is more than any other Silver channel is offering you right now. I've checked, I've looked. Public, time-stamped, falsifiable predictions with grading dates. I'm the only one doing it. Most creators are terrified of being publicly wrong because they think it will destroy their brand. They think admitting error is weakness. They think subscribers will leave. I believe the opposite. I believe that being honest about being wrong is what actually builds a brand worth having. A brand built on trust. A brand built on respect. A brand that lasts. The stackers who watch this channel, people, like you're looking for a research partner, not a guru. You want someone thinking alongside you, not preaching at you. Not a guru to follow blindly into a 50% drawdown. Not a personality to worship. Not an entertainer to distract you from doing your own research. A partner. An equal. Let's talk specifically about the COT data I mentioned earlier. This is one of the most important and most ignored data sets in the silver market, and I'm going to show you why it matters. Commitment of Traders reports are published every Friday by the CFTC, the Commodity Futures Trading Commission. This is government data. Public, free, and incredibly revealing. They show us exactly how the smart money, the commercial traders, the big banks are positioned. Are they long? Are they short? By how much? It's all there. If the commercial banks are net short, they're actively betting on lower prices. These aren't retail traders hoping for a squeeze. These are professionals risking billions of dollars of capital. Historically, they are right more often than they are wrong. Not because they control the market, but because they understand the market structure better than anyone else. They are the market. When retail sentiment is at its highest, when the thumbnails are screaming $100 silver commercial shorts are usually at their peak. The smart money is selling to the dumb money. Tale as old as time. This is the maximum pain scenario for the average retail investor. Buying enthusiasm at the exact moment when institutional money is heading for the exits. If you aren't tracking the commercial position, you are flying blind. You're making decisions based on incomplete information. You're ignoring the footprints of the biggest players in the game. My database analysis showed that 80% of the failed predictions happened during commercial short peaks. This isn't coincidence. This is cause and effect. This is the pattern. The experts were telling you to buy at the exact moment when the commercial banks were aggressively selling. They were reading the sentiment. The banks were reading the structure. This is why the paper market dominance error is so financially costly. It doesn't just make you wrong. It makes you wrong at the worst possible time. It gets you in at the top. It leads to the emotional cycle we've all experienced. Buying with excitement at the top, holding with anxiety through the decline, and finally selling in frustration at the bottom. My goal with this channel is to help you avoid that emotional cycle, to help you trade the structure, not the sentiment, to help you be the bank, not the retail trader on the other side, to help you make the transition from being a believer to being an analyst, from faith-based investing to evidence-based position sizing, from hope to process. A believer buys on hope, an analyst buys on a framework. A believer holds because they believe, an analyst holds because the data hasn't changed. That's the difference. That's everything. Hope is not a strategy in the silver market. Hope doesn't account for the paper market. Hope doesn't track the QOT data. Hope doesn't have an exit condition. Hope gets you liquidated. Data is the only thing that survives the volatility. Emotions change, narratives change, sentiment swings wildly. But data cold, hard, time-stamped data remains constant, reliable, falsifiable. If you've been financially burned by a bad prediction in the past, please don't feel ashamed. You're not alone. You're not stupid. You're not a bad investor. You were participating in a system specifically designed to exploit your natural optimism. The algorithm, the thumbnails, the urgent language, it's all engineered to bypass your rational mind. Now that you've seen the data, now that you know the pattern, you can choose a different path. You can opt out of the hype cycle. You can demand accountability. You can choose to follow creators who prioritize truth over virality, who prioritize your financial outcomes over their subscriber count, who are willing to be boring if boring is honest. I have 3 specific requests for you today. These aren't just calls to action. These are the next steps in building something different, something better, something that actually serves you. First, Hit the subscribe button to join this accountability experiment. I'm not asking you to join the family or any of that parasocial language. I'm asking you to hold me accountable. I publish new data-driven silver and macro analysis every Monday and Thursday. Not when I feel like it, not when I have a hot take. On schedule, consistently, reliably. My prediction accountability log is a living document pinned in the description. You can track every call I make, every grade I receive. It updates automatically, total transparency. Second, leave a comment below sharing a prediction you personally heard that failed spectacularly. What was the target? What was the timeline? How did it turn out? More importantly, how did the creator react when the deadline passed? Did they acknowledge the failure, grade themselves, explain what went wrong, or did they just move on? I want to build a community-driven database of accountability. Your experiences, your data points. Together, we can map the entire landscape of who's trustworthy and who's not. Third, watch my prediction #1 video, linked in the description and the end screen. That video contains my first 5 official time-stamped predictions for the next 12 months. It includes exact price targets, exact timelines, the complete thesis for each prediction, and the exact invalidation conditions. Everything I've promised, already delivered. I've already set the public grading date for December 2024. That's when I return, pull up the data, and give myself a grade on camera, no matter what, win or lose. I'm putting my professional reputation on the line, publicly, permanently, falsifiably, so you don't have to put your capital at risk, based on unverified claims. This is how we change the silver community for the better. Not with outrage, not with callouts, but with a better standard, a higher bar, a commitment to truth, one data point at a time, one prediction, one grading, one honest conversation. Brick by brick, we build a foundation of trust. One scorecard at a time, public, permanent, falsifiable. This is how we separate signal from noise, substance from entertainment, analysis from theater, one honest conversation at a time. You and me, analyst to analyst, no guru worship, no blind following, just mutual respect and shared pursuit of truth. We are moving into a period of extreme macroeconomic volatility. The next 24 months are going like anything we've seen since 2008, maybe since the 1970s. The stakes have never been higher. The petrodollar system is fundamentally shifting. Interest rates are at a critical tipping point. The entire post-Bretton Woods monetary architecture is under stress. Central banks are buying gold at record levels. Not silver gold. They know something. They're preparing for something. And you need to understand what that signal means. In this environment, you cannot afford to follow bad analysis. The cost of being wrong isn't just opportunity cost anymore. It's survival cost. It's capital preservation. It's everything. The financial cost of being wrong is higher than it has ever been in our lifetimes. Inflation is real. Currency debasement is accelerating. Capital preservation is the game. You need a framework that respects the complexity of the market. Not a slogan, not a meme, not hopium. A real, testable, improvable, analytical process. Not a bumper sticker slogan that fits in a tweet. Not financial astrology. Not magical thinking dressed up as research. A framework. A process. A methodology. I want to personally thank you for being part of this journey, for watching this video all the way to this point, for caring enough about your financial future to demand better. I know many of you are here because you're frustrated. You're tired of being wrong, tired of being misled, tired of the hype cycle, tired of losing money on bad calls. I'm frustrated too. That frustration is why I started this channel. It's the fuel. It's the mission. We're going to fix this together. We're going to find the truth together. Not my truth, not your truth. The truth, the data, the evidence, the framework that survives contact with reality, even if the truth is uncomfortable, even if it contradicts what we want to believe, even if it means we have to change our minds, even if the truth means we have to wait longer than we want. Patience is not exciting. Delayed gratification doesn't get clicks, but it's often the difference between profit and loss, because a boring truth is always better than a profitable lie. In the short term, lies can be entertaining, but in the long term, only truth creates lasting value. This is the stack guy, not a character, not a persona, just a commitment, a standard, a promise to you that I will prioritize accuracy over popularity. Data-led, every claim sourced, every assumption stated, every prediction time-stamped. This is the foundation. Data is the bedrock. Everything else is sand. Accountability first, public predictions, public grading, public admission of error. This is the contract. This is what separates us from everyone else. Always stacking. Not just silver. Stacking knowledge, stacking data, stacking honest conversations, building something that lasts. Check out my petrodollar system breakdown series playlist if you want to understand the deep macro forces driving the precious metals market over the next decade. I'll see you in the next analysis on Thursday. Same commitment, same standard, same respect for your intelligence and your capital. Until then, stay skeptical, stay curious, and always check the data. End of transmission.